Hello traders, have you ever felt overwhelmed by complex indicators? This video is for you if you have felt such way before. In this video, we're just going to be diving into a simple candlestick pattern trading strategy for beginners that will help you make smart trading decisions with confidence. Okay, so basically, we're going to be looking into an important strategy that will not require so much indicators, or complex analysis. All right. So candlestick patterns are one of the most powerful tools in trading. They actually reveal what buyers and sellers are doing in real time, making them essential for spotting high probability trade setups. So by the end of this video, you'll know exactly how to identify the best candlestick patterns for trading, how to use support and resistance to increase trade accuracy, how to spot trend reversals and continuations with ease, and apply a simple step-by-step trading strategy in Forex, stocks, and crypto. If you're ready to level up your trading, smash that like button, subscribe, and turn on notifications so you never miss a new strategy breakdown. Okay, let's quickly get started. Now, before we dive into the strategy, let's quickly break down what candlestick patterns are and why they matter. All right. Now, each candlestick represents price movement over a specific time frame. This is the 4-hour chart, and this is a candle in the 4-hour chart. It means that this candle represents 4 hours of price activity. Each candle here represents 4 hours of price activity. If you go to the 1-hour time frame, it means each candle represents 1 hour price activity. If you go to the 1 minute time frame, it means each candle represents 1 minute price activity. All right. So now each candle has a body, it has wicks, and it has a color. All right. So the body shows the open price and the close price. This is for a bearish candle. Then let me use this as a case study for a bullish candle. This is the open price in this case and the close price, right? Then it also shows the wicks or the shadows. It shows the highest point and the lowest point, right? The highest price that candle reached, that is the highest price that the assets got to within that time frame, and the lowest price. All right, the highest price and the lowest price. Then here also, this we have the highest price and the lowest price. Okay, and then the color. You can actually change the color if you want. You can go to properties and then you can change the color of your candles if you wish. Okay, but basically using this my template, the blue candle means that price closed higher than when it opened, while the red candle means that price closed lower than when it opened. Okay, now let's move on to the 3 most important candlestick patterns every beginner must know. There are dozens of candlestick patterns, okay, but for simplicity, we'll focus on 3 powerful patterns that are easy to spot and highly effective. The first is the pin bar or the rejection candle. It's a candlestick with a small body and a long wick. All right, a small body and a long wick, signaling strong price rejection. So when you see this at a support, like what we see happen here, it's a sign of a potential reversal. Likewise, if you see it at a resistance, it's a sign of potential reversal. In that case, the wick is going to be on top and the body will be at the bottom. Then the second pattern is the engulfing pattern, the engulfing candlestick pattern. All right. Now, the engulfing candle is a large candle that completely engulfs the previous one, showing momentum shift. So you can see that something like that happened here. For example, if you notice an engulfing pattern around the resistance, it could show that sellers are taking control. All right. And when you notice a bullish engulfing around a support, it could be that buyers are taking control. All right. Then the next candlestick pattern is the doji. Okay. the doji. It's a small bodied candle with wicks on both ends. Alright, it indicates indecision. A doji means buyers and sellers are in a tug of war. If it forms at a key level, whether resistance or support, be ready for a possible breakout or reversal. Now, candlestick patterns alone are not enough. Okay, to increase accuracy, we combine them with support and resistance levels. For support levels is a level where price tends to bounce back up, like what we can see happen here. Then resistance level is a level where price tends to reverse down. So the best patterns, the best candlestick patterns appear at these levels, support and resistance levels. For example, if you see a bullish engulfing at a support, that could be a strong buy signal. Okay, now let us just put everything together in a simple step-by-step trading strategy. The first step is to identify key support and resistance levels on your chart. Okay, once you have identified these important levels, the next step is to wait for a strong candlestick pattern to form at these levels. All right, whether it's a pin bar or an engulfing or a doji, just ensure that a strong candlestick pattern has formed around these levels. Then you check the direction, the trend direction. Trade with the trend for higher accuracy. All right, it's very important. After that, you enter a trade with a stop loss. For example, if it's a buy trend, if it's a bullish trend, right, you enter a buy trade. After you have spotted, for example, you can see this pin bar around here. You can enter a buy trade and set your stop loss below the support. If it's a sell trend and you notice a bearish candlestick pattern, you enter a sell, set your stop loss above the resistance. All right, then for your take profit, you can just target support levels for a sell trade and target resistance levels for a buy trade. Okay, this strategy helps filter out bad trades and keeps things simple and effective. All right, so you can see that this is a very effective, is a very simple strategy that is quite effective at the same time, because you are focusing on market structure, you are focusing on price action itself without necessarily adding a lot of lagging indicators to your chart. Okay, so basically that is it for this breakdown of a simple candlestick pattern trading strategy for beginners. If you found this helpful, hit that like button and drop a comment letting me know which candlestick pattern you use the most. And don't forget, subscribe to the channel and turn on notifications so you never miss a new trading strategy. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.